All right, welcome back for the episode of Carnivore Trade. Today is Monday, October 31st, 2022. If you've not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, happy Halloween to everybody. Hope everyone has a safe holiday. Don't do anything I wouldn't do. But anyways, let's get into the market here. Spiders basically sideways for the most of the day here. As you can see, just stuck in a tight range. Looks like some Monday theta burn, OPEX theta burn, and really all eyes on the FOMC this week. So I wouldn't be surprised to see a little bit more of this type of action tomorrow, some more backing and filling. And you can see here on the daily, it's really just an inside day, all things considered. Spiders down 69 basis points here on the day. Triple Q's down a little bit more, 1.16. And again, kind of the same story, right? Weakness in big tech. Apple down 1.5%, although that one's still been a strong horse. But you know, Amazon down 1% here. Meta down another 6% there. So weakness from the kind of the big tech names here. You see Microsoft finished lower as well, as did Google. So big tech weak, and really the strong horse was XLE again. Although with XLE, I believe Biden made comments about possible windfall profit tax. I think he's going to do that after the bell today. So that did cause a little bit of a sell-off here and intraday. And this does look like a little bit of distribution here to me in the near term on the XLE. Still a strong horse here, but very overbought going into double top. Any case, all eyes are really on the FOMC right now. Nothing has really changed. So we just have this inside pattern here. We put in the low, little flag here, and now we're up 1-2 pullback. Huge bid last Friday, of course, stalling out at that 100 moving average. And again, market's just, you know, short-term kind of overbought. Maybe need to reset the technicals here a little bit. And again, just kind of an inside day stuck beneath that 100 moving average. Nothing's really changed from the Friday video or the weekend video I did over the weekend. Again, we're still expecting maybe not necessarily a dovish Fed, but I do fully expect them to use pause verbiage, and I think the market will like that. And that could be a case for a little bit more upside here. Again, I still think the powers that be want the market up into the election, and or at least to hold up, you know, at the very least. And that's really going to be the case here until proven otherwise. Now, again, we're still looking for targets here. So you have that inverse head and shoulders. Of course, everybody's aware of that now. And then that is juxtaposed really to the bigger head and shoulders. But again, target really lines up perfectly right around that 400 handle. So logically, that could be an upside target if we were to even get up there. Again, this is all just hypothetical. But again, you have to think that any sort of verbiage like pause, pivot, anything like that that the Fed uses, the market's just, the algos are just going to take a hold of that and run. That may not last. It could last a day. It could last a week. We'll see what happens here. But that's really what's happening here. Now, as far as going into the FOMC, what we're going to pay attention to closely is technical positioning. So we're in decent technical positioning now, but if we were to get above that 100 moving average, or if we were to get below the 50 moving average here, or back below, you know, that 380, 382 area on the spiders on the daily, that would, you know, that would have, you know, that would implicate a difference, a change in the technical positioning. What I mean by that is if a sell-off happens on the FOMC, but we're above the 50 moving average, or we're, you know, hammering on the 100 previously, it could cause, you know, it could give you room for a higher low. Conversely, if we're below that, it's going to be a lot harder for the market to make a higher low, and a, you know, any sort of bullish reaction would give room for the bears to make a lower high. So just something to consider here moving forward. But again, an inside day today. I don't expect much tomorrow outside of, you know, if we get some news or whatever. But we'll see. Markets are kind of in a holding pattern right now, and we'll just leave it at that for the time being. Triple Qs here. Again, same kind of thing. I'm not going to get rid of this gap now because we don't need that anymore. Really, the important levels here are now that 290 area, again, which coincides with that downsloping trend line. So we'll be watching that as well. The Qs, for what it's worth, are below the, you know, is below the 50 moving average. So again, technical positioning means a lot here. And if we get a bid, let's say we get a power bid off the FOMC, but we can't get above that 50 moving average, that'd be a pretty big red flag for me. So I want to see tech recover. I said this over the weekend, you know, how many times have you seen a market bottom where the semiconductors were not a leader? You know, you want to see the NASDAQ leading, you want to see semis leading specifically. And, you know, we're not seeing that right now. So again, builds the case here and supports the case that this is just a bear market rally. And that's really all, that's the camp I've been in since the beginning. But just to reiterate that for you guys. Anyways, yeah, so we talked about the Qs. Looking at the semis now, again, levels are still the same. We got above that 190 area on a weekly close Friday, so that is a positive there in the short term. You know, upside targets here afterwards are 195. You'll have a little bit of a speed bump at that gap fill, or excuse me, gap window right here at 195, but you've had a nice little consolidation, right? So this has been gone. You're in a right angle consolidation for the last 5 days, so this has a chance to get through that. Same thing with the 50 moving average. The 50 is a little bit, you know, the more we consolidate here, the more minor that becomes. So just be aware of that, but then your level past that will be this gap fill, right at around that 200 handle. So though that's your bigger resistance level there on the SMH, but for right now, it's still flagging, still hanging in there, so we'll give it the benefit of the doubt. Same thing with IGV. I don't even think this trend line is that important at this point. You've really made that minor here the last, again, 5 days of consolidation. So this is setting up for a possible, you know, little zigzag move here. Same thing with the SMH there. You know, move up off the lows and then kind of flagging there to the side. So all things considered, you know, it's not showing leadership that you want, but that doesn't mean it can't have an ABC up here in the near term before it's all said and done. So just be aware of that. Dow Transport's actually on the stronger side today, so finished up 6 basis points in a market that was negative on the day, so showing leadership. That's a good sign. So Dow Transport's through the gap fill last week, and yeah, they're holding up okay. Again, kind of negated that kind of bear channel there to the upside. You got above the 20-week moving average on a weekly close. I like that. Now your next level is right around that 14,000 handle. There's a lot of daily chart resistance there and weekly chart resistance just above that at 14.2, which also coincides with that downsloping 200 MA. So be on the lookout for those levels. But for right now, Dow Transport's actually holding up okay and got a daily close, a secondary daily close actually above that 100 MA. So decent move there for DJT, and we'll continue to watch that moving forward. Interest rates here. Nice bid here on the 10-year. So again, just pulling back into that 20 moving average. I know a lot of people were, you know, calling for the top in rates and possibly the dollar here. Dollar bidding up again today. But interest rates, you know, again, I said this last week. All it did was retest the 20 moving average. It's not like we did anything major here or anything that we haven't done before. And you see the TNX getting a bit off of that. TYX, the 30-year, same kind of deal there. And TLT just, with the exception of the last 10 minutes, there was a pretty good bid here. So somebody snuck in a bid in the last 10 minutes of the day. Not sure what that was about, but this was getting hit all day long. And then you had a nice little pop there in the last 5-10 minutes there of the day. So TLT did hold up, but again, down 70 basis points on the day. And then the 2-year, of course, down another 13 BP on the day, confirming back below the 20 moving average. So again, still remains in a weak position. And this is going to be a headwind for the Fed, and it's going to be a major problem. So again, you guys know the thesis here. Market will like the Fed when they say pause talk, and they'll like that in the short term, but it'll become apparent very quickly that it's just talk and it's just a consideration here. This is really all that matters. The 2-year, if the 2-year keeps going down, the Fed still has work to do. That's basically the bottom line here. Anyways, flip over to Home Builders XHB. Starting to build up a daily inside bar. So this choppy pattern, up move inside of the green bar there. Not a terrible pattern there on XHB. The problem is you still have a weekly bear base starting to form. There's a lot of resistance up here with this red bar, but it's hanging in there for now. ITB, same thing. So again, a little inside day today. But again, you had a nice pop Friday. And again, you're starting to consolidate sideways. Nothing wrong when you see an asset do that. It's above the 100 moving average as well. So this has, you know, I could see this getting up into that upper, you know, maybe this pivot high here, or possibly up to that 200-day moving average. So not a terrible pattern here. Macro, big picture, you know, you've got a big weekly kind of bear base here, right? If we look at the monthly, you know, same kind of thing. You know, big move down. You did have a nice reversal there, but this is still just sideways chop after a big down move. So you have to be careful of that. But short term, it's hanging in there okay, and we'll just leave it alone for now. VNQ here, a decent inside day, down 11 basis points, but in a market that was down 60, 70 basis points, this held up okay. Again, I do think this can come up here and fill that gap. I do not think it gets much through that here currently, but it's in decent shape right now. XLF continuing to hold up strong. Down 21 cents. JP Morgan continues to be a strong horse that did back off the highs in the last Yeah, it looks like the last, yeah, 30 minutes, 10, 20, 30 minutes, last hour really even. This was green most of the day. It did finish red. So no confirmation above the 200 moving average. And this is, to be all fairness, it's pretty overbought here. But again, it's a strong horse right now, so you have to respect it. XLF, again, inside day, and it's holding up okay. You'll have some resistance up there at the gap fill should you get up there. And then you have that 200 above that. So obvious resistance levels there. XBD basically flat on the day. So again, holding up nicely. Little overbought here. But, you know, that's a nice impulsive move there for XBD. So again, it still needs to be respected, all things considered. Crude here. Just continuing to flirt with this trend line. If it stays around here a lot longer, I'm going to probably just get rid of this trend line because it's been violated a lot lately, especially on the weekly. It's not even really that good anymore. But we'll see what it does tomorrow. If it can bid back up above it, then it can confirm. If not, then it's just kind of getting in the way here. And you also have this yellow trend line, which is starting to become a lot more minor as we've traded through it a lot. And I know it's kind of making the chart messy here as well, but you know, you can see it going back there the last year, exactly a year ago today. So that was, yeah, right there. And yeah, that's your level there. But anyways, I wouldn't rule out another move down. If not, then you look for a bullish pattern here. I do think crude is it's going to be, it should be bought on dips here moving forward. They're not going to have incentive to drain the SPR anymore after the election, and that's really the bottom line. And not to mention all the supply bullish fundamentals for crude. But anyways, a down day for crude here, and we'll continue to watch that. We talked about XLE a little bit. Still a strong horse in a weaker market, but really overbought here. I mean, like absurdly overbought. XOP is starting to back off a little bit from that double top here, but still in decent shape. And OIH, a nice surge today, up 3%. It's been pretty resilient, but again, this is getting very overbought as well. You know, maybe these things want to go up there and test double top, specifically OIH and XLE. I definitely wouldn't rule that out. Maybe even a pierce of that. I do not think that this is a buy right here. This is definitely set up for a correction here, and I'm starting to see signs of a little bit of distribution here in these names. Doesn't mean that's going to, again, micro versus macro. Macro, big picture, I still like energy names, but near term, micro, these are getting a little extended here, and I'm starting to see signs of some exiting. So just bear that in mind, take that for what it's worth. Anyways, Nat Gas, another powerhouse move up 10%. And again, I told you guys on Friday, absolutely killed it with Boyle. Our entry was 33.27, right at the lows here yesterday. We took gains on the first half of our position before the close yesterday, and you know, Boyle up another 16% today. So we're rocking and rolling on that position. That's the second time we've traded that in the last 2 weeks, and absolutely crushing it here. I think this can get up and fill that gap, maybe even tomorrow. We might even have upside to that 200-day moving average there before it has any sort of significant pullback. But you know, it is short-term overbought. You've had 1, 2, 3, 4, 5, 6. You know, 5 out of the last 6 days, you've pretty much gone straight up. So Nat Gas a little short-term overbought, but it is, you know, it's behaving well. I told you guys this is going to be a buy area. You know, look at down-sloping trend line, up-sloping trend line, 100-week moving average, oversold, you know, multiple factors here. This is your $5 whole round number, you know, tons of levels here. I can get rid of some of these to clean up this chart a little bit now. But again, and now you're kind of back testing that 650 area, which was your previous pivot high. But again, I think it wants to fill that gap first. Either way, loving the action in Nat Gas, and specifically because I'm long Boyle, but either way, really killing it. And I do like Nat Gas here. I think it still can be bought on dips moving forward. We touched on the dollar a little bit earlier. Again, got back above the 50 moving average. And really all you did on the weekly is just test that green bar low, and you passed that test. So dollar is still holding up. I still have a price target of 120 on this. So that has not been satisfied. That's based off of a measured move, a longer term measured move here. And, you know, you did violate this trend line twice now. So it is starting to show a little bit of weakness. But a lot of the time before you have a blow off move, sometimes you get those kind of violations here. And that's something to definitely keep an eye on. But for right now, dollar is holding up, and that's going to drive yields higher, which is going to force the Fed's hand even more. So just bear that in mind. Gold here on the weaker side, so this is not a pattern of strength here. It's in a very weak technical position below all 4 major moving averages. I think it wants to break this double bottom. The FOMC might be a wild card. Maybe it gets a bid off of that. You know, especially if they talk about pausing. Bonds are going to like that in the short term. But I don't see this as a pattern of strength right now. And I do think it goes down for one more good washout. And you'll see the hate for precious metals hit an all-time high, or at least a major high. And that's when I'll be buying. I already have the levels worked out, so it's just a matter of waiting for that to happen. Silver here is much better than gold right now as far as the technical position. Still holding kind of this inside bar here and just kind of chopping sideways. So I wouldn't even rule out a move up to 2050 here in the near term. Again, FOMC could be a driver of that, but all things considered, silver's holding up okay. Platinum pulling back a little bit. You know, it's hanging in there okay. I do think this can be bought on dips, although I think the upside is a little limited here. You know, maybe just to that 1,000 handle in the near term. So for me personally, you know, if you want to trade the futures and you got leverage, you know, go ahead and do it. But for me, it's not really that worth it considering the upside. I'd have to use so much capital. But for right now, for what it's worth, I do like the pattern, and I think it's pulling back nicely here. Copper also fading off the highs and finding some support at that old trend line for now, but it did close below that green bar, that breakout bar, so that is a sign of concern here for copper. And then the bigger overarching concern for me is that you're starting to build kind of a weekly bear base here, and you were not unable to get above that 20-week moving average on a weekly close last week. So a little bit of softness there for copper, and that is noted moving forward. Bitcoin here really kind of looks like a lot of other things, almost looks like kind of the semiconductors here. You know how we talked about that kind of sideways, you know, up pattern sideways. So again, still trading somewhat like leverage tech, and I wouldn't give it, you know, I would give it the upside bias to that pivot high there, 22.5, 23,000. You're putting in decent consolidation, and again, you're back above the 50 and 20 on the daily. You got a nice little inside bar there. Take a look at ETH, you know, kind of stair stepping up as well. Not terrible, and we did negate that. Let me just get rid of it now because we negated that head and shoulders. So that has failed now. And Ether's holding up okay. So, you know, if this consolidates a little bit more, this can get through that 200. And, you know, then you can go challenge that 1800 handle. So Ether holding up okay. Doge continuing to short squeeze here off of that Twitter deal. And you can see it went right to that 15-cent handle. So look at how the charts work there. Beautiful back test of that 15 handle. If this consolidates, you know, who knows, maybe it can squeeze again, but yeah, Doge getting a nice bid off the lows. It's up, yeah, almost 100% here in the last week. So nice move there for Dogecoin, and that's, you know, kind of giving a tailwind to the crypto sector. Anyways, yeah, all eyes on FOMC here. I don't know what's going to happen tomorrow. I wouldn't expect too much. I can't imagine there'd be too much really going on. You know, if there wasn't a lot going on today, outside of news, I don't expect much to happen here tomorrow, but you know, it's all eyes on FOMC, and you guys know my thesis on that and what I think is going to happen. So anyways, guys, you have a happy Halloween. Take care. Be safe. I will talk to you guys all tomorrow.